I've never seen an investor base that cares less about actual fundamentals than the Tesla investor base.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots and throwing it back for another of the most scintillating hours in finance radio. I got to say that I said this, I think it was last week or something. I just missed saying that. I remember the first time I introduced that, I thought it was funny. I got a chuckle out of it. And then, and then it just becomes kind of a thing. And you do something for like, what did we do the show for? I want to say it was like 8 years. It kind of gets baked into the cake. Anyway, I still think, maybe it's not technically on the radio, but I still think it's one of the most scintillating hours in finance radio. And that's why I said it's like a one-horse race. There's not a lot of finance radio out there. And my favorite races are those. It's got a much better, it's like, would you ever run for public office? And I'm like, if I ran unopposed, maybe. Right? If you can guarantee me to win. No, talk about a nasty job. Yeah. Anyway, I get off track. Well, and I am not joined by the brain trust himself. He is out. I am back from a little bit of a family trip. The annual, let's see, me and all my buddies played college football together. And so every year we started an annual guys golf tournament. We went to go to this little golf track out in kind of the far reaches of Eastern Washington, a small little town that nobody's aware of, especially if you're not from Washington. And then over time, what happened is we found out like a lot of our wives were getting together with the kids while we were gone. And so then pretty soon it was kind of like, well, if all the wives and kids are sitting at home waiting for us to get back, why don't we just include the family? So we do. And, it's not the guys' golf trip anymore, but it's a little bit fun. Plus the boys are starting to get to the age. None of the girls are that into golf. I tried with my daughter. She wasn't that into it. But a couple of our sons are pretty decent players and they're getting into it. And so they played with us a little bit this year. They're just kind of getting to that age where they can start competing. And I kind of think next year we might have some full-time son entries. We'll have to see. Anyway, that's where I've been. So Chase has been running the dots for the last couple of days, but I am back in the saddle. And happy to be here. So let's start off with a little bit of rundown. Several different topics I want to get to today, but let's give a little rundown of the indexes. So here we are, just officially closed. S&P up, what are we at, 0.26. NASDAQ just a little bit above flat, up 0.06 on the day. Russell, small caps, doing a little bit better, 0.78. Which is kind of a bit of an odd move considering the comments by Jamie Dimon out today. Jamie Dimon was saying he thinks there's a 40 to 50% chance in the next 8 to 12 months that we could have even higher interest rates. I don't know about that, but I will say some of that survey data, and I haven't had a chance to go through some of the particulars, but we talked about it earlier. We were talking about some of the survey data. Some of the ISM numbers would fall under that, right? Chase and I were talking about this for last year, how when we talked about real quote unquote economic weakness, the only real weakness you were seeing was in the survey data. Some of that survey data is flipping more positive. I'll still issue the same caveat with it. I like that horrible service data, right? All the recessionistas, 3 months ago, definitely saw some weakness, and we were talking about that. But just to sit there and start talking about odds of recession just because you've got some bad survey data, there's just, and I'll repeat it, there's just too much noise. You just can't trust the surveys. I mean, certainly sometimes they can be right, but it's just too often that there can be noise and other macro forces can come in and swamp them out and things like that. Plus, with the passing of the big, beautiful bill, I don't see any, rogue waves coming on that side of things, like, surprise, freezes of government or the inability to continue spending. And I'll just tell you guys, like, as it relates to the U.S. government, the rate of, deficits and the rate of spending and debt and all that other kind of stuff is very concerning. But when you're talking about corporate earnings, or you're talking about, valuations and GDP in the traditional sense, in the traditional way that it's measured, when you see a government increasing its deficit by $500 billion, it's kind of hard to be bullish, or kind of hard to be bearish about that, right? And then furthermore, when you see the government doing that in an environment where you're looking at, what are we at here? On, let's see, on oil, you're sitting at, on Brent, you're at 68. WTI here in the US, you're at 66. And then Waller is coming out, and I'm still convinced, like Chase was saying, I'm still convinced that he wants that head job. But he came out today and said, look, it's not political. He thinks that the Fed's going to be cutting rates in July. So you add those two things up, I think it certainly explains, Bitcoin breaking out to a new high today, which it did. As a matter of fact, let's go to Bitcoin real quick. Where are we at? I'm trying to see, is there a Bitcoin listed on this? I don't ever look for Bitcoin on here, so I don't know if it's on this screen. Let's see where to go. You were right around 113 Bitcoin. Yeah, 113.3 is where Bitcoin's at. But look, you guys know me, and I want to talk. I want to have an extended conversation about crypto. So before we get into that, you know me, we own some Bitcoin. I am not a crypto shrill by any, or shill, or what is shill? I'm not shrill about crypto. I'm also not a crypto shill either. But, anytime that you've had Bitcoin do this, what I mean is set a new high, then kind of pause out, bounce up against that previous high several times, get smacked down a good 15, 20%, and then move on to make a new high. I'd have to go back and look at the charts, but that's pretty bullish. I'd put it this way. I wouldn't be short any Bitcoin in any way right now. As always with crypto, I think you got to take everything with a grain of salt. And I got an email from a client today. I love the guy. It's one of my favorite clients, actually. They're all my favorites. No, but just a very sharp guy, and very involved in the investment world. It's always fun to chat with him. But he's like, crypto isn't Bitcoin. No, I get the sentiment. And I do think that Bitcoin is different from a lot of other cryptocurrencies. But it is crypto, guys. It is code on a computer that has no utility other than to transfer money from place to place. There is no IP. There are no patents. And in that way, I think that it is a bit irresponsible to try to separate crypto or Bitcoin out of the general crypto, environment. Now, like I said earlier, do I think Bitcoin is different? Yes, because when you look at the protocol, when you look at blockchain, when you look the way Bitcoin was set up, Bitcoin was clearly set up to be a store of value. That was the intention. That was the purpose, right? You look at some of these others, they're answers to Bitcoin. They don't have the same protocols. They don't have the same restrictions in terms of the creation of new Bitcoin. And then also Bitcoin is just the most broadly accepted and the most widely held. And so you're going to give it kind of that first mover advantage. But the certainty I hear coming out of crypto world, even people that aren't what I wouldn't consider crypto bugs, right? Maybe it's fair to call them Bitcoin maxis. But I think the certainty is insane. And I'll get into that in a little bit. But again, it's not that I disagree with where those people are saying. I'm never going to sit here and tell you Bitcoin isn't going to 1 million. I'm never going to sit here and tell you Bitcoin isn't going to 10 million. It's the certainty around it that is insane. And I want to repeat that. It is insane. Why is it insane? It's not insane because I disagree with what you think is going to happen. It's the certainty is insane because you're talking about something we've got absolutely no prior experience with. We have no prior, right? Think about it. Bitcoin hasn't even been through a proper recession, not a real one. Bitcoin hasn't been through a proper, real economic hardship. Oh, look, what are you talking about? Look at COVID. Bitcoin got slaughtered during COVID. Now, it came back impressively, don't get me wrong. But my whole point is saying, look, whether you think Bitcoin is going to zero, whether you think it's going to 10 million, I think both of you should take a pause and recognize you don't know. Okay, now, you could say that about any stock. That's true, but do I know that ExxonMobil is going to be here in some way, shape, or form next year? Yes. Even if the company fails for some reason, its assets will still be producing cash flow, right? Like, barring some existential, world-ending great meteor or something like that. But McDonald's will be making cheeseburgers next year, right? Their real estate has a value to it, right? Same with Exxon. You cannot say that for Bitcoin. You just can't. So, like I said, I don't want to blow my top. We'll get into a broader discussion. But this actually surprised me a little bit. Who was it? Was it Delta? One of the airlines. You saw a big rally today in a lot of airline stocks. One of them posted surprising. I haven't had a chance to go through the numbers yet. One of them posted some pretty surprising results. I think some pretty substantial beats. Let me pull this up. Yeah, it was Delta. Okay, so I got to be honest with you. That was a little surprising to me. Now, what I will say is this. I think Delta's doing a great job. I think as a company, Delta's got a really sharp CEO who's worked his way up. I think they're very in tune with the desires and the likes, not likes of their clients. I think they certainly or their passengers. I think they're certainly more in tune than that than the other airlines. But the reason it caught me off guard a little bit is, as a guy that's been traveling, not a lot recently, but some, I've been surprised at the lack of traffic in airports. Now, that is not a scientific measurement at all by me, but I don't know, if you were traveling 2 years ago, now to be fair, you still had the kind of the COVID rush coming out of that. But even prior to COVID, lines have been smaller. Airports haven't seemed as packed. I was a little surprised. Again, not expecting massive weakness there, but a little bit surprised. The one thing I would say is that I don't know. I'm really interested to see the other airlines' results. Now, this isn't like hard-hitting financial news here, but the reason I'm interested to see the other airlines' results is to me, at least for a while there, I feel like the airline industry got completely commoditized, which means the only thing I really cared about was where it was going, when it was getting there, and how much it cost. I will say this, and it's kind of shocking me. I have gotten a little bit Delta, not a little bit. I've become a Delta guy, meaning, look, I'm not going to fly out at a time or on a day that I don't want to just to fly Delta. But I'll be lying to tell you that I don't look for it. And I'll tell you, especially on long trips, right? If it's going to be something that's going to make me, and I kind of categorize this as anything over 5.5, 6 hours, I just pony up and do the first class. I know it's not the best financial move, but I've flown coach my whole life. And good golly, especially on those really long flights. Like my wife and I went to Bora Bora for our 20th anniversary. Had an unbelievable time. And this is a side note, but for anybody that's interested, Tahiti and Bora Bora were a couple of places unlike I'd ever been to, in the sense that they were just as spectacular as you'd imagined, without any significant downsides. We've all been to that vacation where you see pictures of it, or you see pictures of the resort or the area that you're going to be staying, and it's just like it's enthralling, right? It's magical. It just looks so spectacular. And you get there and that place looks like that, but a lot of the place you got to go through, right? It don't look that way, and it's kind of a bummer. And this place was just, It really was unbelievable. Anyway, I digress. I remember purposefully picking Delta flights because that's like I think it's like a 9.5 hour plane flight. And man, those guys do first class correct. They really do. So anyway, I'm interested to see, is it completely commoditized? Do all these things? Because then you look at the other airline companies today and they're up, let's see, DAL stock. Hold on. Yeah, they're all up right around the same percentage, right? 12 to 15% on the move. And the other airline companies are up just as much as Delta is, or virtually the same percentage in a sympathetic move. I'm just curious to see, are they completely commoditized? Will they put in results that are right in line? Or could Delta be starting to, differentiate itself a little bit? I'd be surprised. As a guy coming from the Seattle area, everything used to just be all Alaska all the time to us. And still great people there. I don't hate Alaska. The experiences there just haven't been as good. Customer service hasn't been as good. They got this whole we get your bags on time thing all the time. I can't tell you the last time we got our bags on time there. So anyway, it'll be a little interesting something to watch. Finishing kind of the rundown of the day. You got gold rallied. You're up about 0.4% in gold, up to 33.33. Easy round number there for you. Nice little move in there.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate and actual performance may differ.
Another one we're watching. I'm still a little bit perplexed as to why Chinese tech isn't getting more of a rally. And I catch myself kind of torn between two stories here. One would be the story that is just the rally here in the U.S. is sucking kind of all the juice out of other markets. That really doesn't seem to be mirrored by what you see in going around the rest of the year. Like for instance, today the FTSE's up 1.2 over there in London. DAX is down, but nothing crazy. A lot of the international markets continue to hold serve, keep pace, if not outperform their U.S. counterparts. Same story in Asia today. Outside of Japan, Asia did pretty good, better than the S&P and the NASDAQ. I'm kind of surprised you haven't seen Chinese tech go on a run here. I mean, you go back and look at the Alibaba, 10 cents of the world, BYD. You've got some big movers there that are doing really well. But that being said, I don't think that the juice or the stimulus that they're pumping on the Chinese side is quite to the extent that we thought it was. It's certainly not getting down to the end consumer as much as we thought it was. And that's kind of a battleground type situation there. There's some very smart investors. Rob Citrone, former worked under Druckenmiller and Soros. Great track record, good returns, smart guy. He thinks it's a no-go. He thinks that their market could easily fall another 50% from here. That is counterbalanced by all the stimulus talk and all that other kind of stuff that Chinese politicians have been discussing. So that's kind of an interesting one, but I'm kind of surprised. I mean, those Chinese tech companies really haven't moved in the last month, much of anything, which, like I said, caught us as a bit of surprised us, certainly. Bitcoin rallying a little bit more here in after hours. You're pushing up, about 113.5 now. And again, you guys know us. I mean, I think we've kept you up on it. We sold it at 108, bought it back. I want to say right around 78.80. And we've been holding it and letting it run here. Again, if you go to the charts, go to the history of this thing, I think it's pretty hard to be bearish here looking at this chart and this recent breakout to a new all-time high. And then that's also happening at the same time. Dollar is still weak. You're still sitting around that 97 level on the DXY, so that seems to confirm. But other than that, when you look at the bid coming into tech, now to flip back today, there is still so much unbelievable amounts of nonsense going on in this market. It's incredible. I kind of give you an idea, and this is writ large all over the place. We talk about things being stupidly overvalued all the time. I read a Tesla note by an analyst that came out today. And it spurred another, out of nowhere 4.5% rally on Tesla. Wouldn't be surprised for it to get absolutely smacked down again tomorrow. But that being said, like I said, I've never seen an investor base that cares less about actual fundamentals than the Tesla investor base. And I can understand why, right? I mean, the fundamentals there have been shaky at many times and the stock has still gone up. But it's just fascinating to see the stock with this kind of strength and this kind of valuation, watching it to continue to suck wind. And there's just so many bad narratives out there. I was sitting there listening to a quote unquote research piece by this guy. Came out, what was he? I don't even remember the name of the firm. But came out and said he thinks the sell-off is overdone on Tesla. Now, again, I'm not picking on Tesla. You guys, I think I've been really clear about that. I love to point out when things are trading at completely irrational levels that are tied to nothing. So first of all, he comes out and says, we see the stock going to 320, which suggests a 7% upside from current levels. Stock's currently trading at 308. I don't know if the guy can't do math, but that's not a 7% upside. It's like a 2.5% upside. Okay, so now we probably just misspoke or got misquoted or whatever. That's fine. But then listening to how he got there, and this is what I wanted to point out. They got there by assigning a 15x multiple to 2040 EBITDA estimates. 2040. I'm not sure of anything in 2040, let alone the price of a stock like Tesla. I mean, and the reason I bring this up is I don't think that you could have a better sentiment gauge or an idiot gauge than that. The fact that somebody that is considered a professional and somewhat serious at what they do puts out estimates or bases their stock price call today on their 2040, that's 15 years from now, their 2040 EV or their 2040 EBITDA estimates for Tesla may not even be making cars then. You can't make this stuff up. And the reason why I say that is in a normal environment, if you walked into any investment boardroom or you spoke at any conference and you start talking about estimates of EBITDA 15 years out, you get laughed out of the room. Not if you're talking about an entire industry, right? You could make those estimates. Like for instance, people made those kinds of estimates about the internet in, the early 2000s and they didn't end up being far off. A lot of them ended up being understated. Okay, but we're talking about an automobile manufacturer, not EVs as a total, not robots. Well, Tesla embodies all of them. No, you think it does. Okay, what I know right now is Tesla is getting its lunch taken from it, and that lunch is getting eaten right in front of them by their competitors, mainly BYD coming out of China. It just is what it is. And then further on, the guy goes further along in the article, talk about, Tesla still relies on its big advantages and cash flow and profit and all that. And you're like, well, again, their margins have been smashed. I mean, you're talking about like 70, 80% margin reduction. Now, again, I'm never going to look at Tesla and say they can't get back there. But when I'm watching these people write in their own stuff, they're basing their research on things that just aren't there. Maybe he's factoring in a return to high margins for Tesla. But again, how's he factoring that in? Right? The demand for their cars, the sale for their cars has gone down 13% year over year. And that's with drastic price reductions. Right? So Tesla isn't proving that, hey, if we pull back on prices a little bit, we can drive price. They're showing that we've got to pull back on prices just to keep the bleeding at 13% drop in sales year over year. So anyway, I had to bring that just a good sentiment gauge. And, I'm constructive of this market. I think this market goes higher. I still think it's one of the most absurdly priced and valued markets that's most devoid of fundamental pricing in anything I've ever seen. I have never seen investors more willing to make bets on ridiculous things that neither party has any clue or insider edge on. I have never seen more wild speculation on price movement for the sake of nothing other than price movement with zero fundamental backing. And yet here we are. And we just kept saying, now you've got the S&P at a new all-time high. You have the Russell, or not the Russell, but you got the NASDAQ at a new all-time, and you got Bitcoin there. You can be as bearish as you want. People are like, well, the Dow has, you're real close on the Dow, but remember the Dow's 30 stocks. So when I'm looking at breakouts, I'm taking, the NASDAQ and the S&P 500 are much better indicators for that. You throw Bitcoin into it and it looks downright bullish. Now, pivoting that discussion on Bitcoin, this is what I want to talk about. And the reason why I want to say it is even I had this email exchange with a client of mine, and I'm sitting there going, okay, even my clients don't know my positioning on Bitcoin. And I want to have a discussion on Bitcoin that is based on no supposition, that is based on no opinion, that is based on no derived or come to conclusions that I've made, that you've made. Let's just talk facts. Okay. Now, again, I want to remind this that Bitcoin has been one of our best performing investments. A lot of it does to the prescient trading that we've done. I mean, our Bitcoin investments have netted us over the last at least 2 years. And I'd have to go back and look at the exact numbers, so don't quote me, but we have made substantially more returns on our Bitcoin investments than Bitcoin has gone up, just through timely and prescient trading. But when we start saying things like Bitcoin is digital gold, Bitcoin is money, it's just not accurate. Okay, now what is the difference between? I'll give you one big difference between, a couple. First of all, gold has thousands of years of history. It's also getting purchased by central banks. That's a much bigger nod to it being money than Bitcoin. But here's my biggest pushback I'd put to you. If the price of gold dropped enough, let's say gold got down to 50, 60 bucks an ounce, you'd see the utilization and the use of gold go through the roof. One place in particular you'd see it is a guy that lives on the saltwater and owns a boat. You'd see it in the marine. I mean, for $50, if I could coat an outdrive or some other things in a thin film of gold and never have to worry about corrosion, sign me up, baby. The connectivity of it, right? The conductivity of it, its ability to conduct electricity, all those different factors. If the price of gold dropped enough, you'd see the commercial utilization of it go through the roof. Cannot say the same for Bitcoin. I think that's a big difference. Why is it a big difference? I think it points to something that everybody should know about Bitcoin, is that there's no underlying intrinsic value. People are like, oh, what do you mean? Look at the blockchain. Da-da-da. Well, yeah, that's a really cool thing. But the way something is accounted for does not define its value. Right? Let's run it through that gold price. Let's say the price of Bitcoin drops to $100 a Bitcoin. Will that increase its utilization? No, that's not really how it's used. First of all, it's just total. Like let's talk about the vast majority of people that own Bitcoin. They're not using it for the utility. They're not buying it so they can transact money without fees across international borders. Now, that aspect may come in handy for them at some point. But there is no there, right? If Bitcoin drops to $1,000 or $100, it doesn't mean all of a sudden, we can use it for all these different things. And again, I think that points to there's no underlying value. I know that there isn't. There's nothing there. Okay, it doesn't even have IP. And if Bitcoin was just so incredible, if it was living on its own merits, it doesn't have any IP. You can copy it right now, make Bitcoin 2.0. Call it Splitcoin, Zitcoin. I mean, you call it whatever you want. Well, yeah, but it doesn't have the network effect. Well, yeah, but the network effect is part of what makes money, right? So, but I mean, if you get down to the definition of money, it's got to be, universally recognized as money. And one of my biggest things for that is, can it be used to pay taxes? Not as of yet. Now, it seems like that might change here in the US based on this administration's posture on it. But look, I said this, and I think that my client that I was having this discussion with, I think he knows more about Bitcoin than I do. And so I'm not sitting there saying definitively that he's wrong. And like I said, we own it. Okay. We own it. So I can't be anti-Bitcoin. But where I do get frustrated is where these things get ascribed to Bitcoin and it gets attributed things to it that aren't factual. That's just, you can want that to be the case. You can tell me Bitcoin is money. That's an opinion at this point. It just is. Bitcoin's gone up a lot because a lot of people have bought it and nobody's making any more of it. That's what we know about Bitcoin. But can I see a scenario where Bitcoin's worth absolutely zero? Yeah, crash of the power grid. Multiple power grids. In which case your gold coins would work just fine. Now, guys, remember, keep this in context. Before you get mad, go, oh, he just doesn't get it. We own it. And I guarantee you we own more of it as a firm than 99.5% of you listening to this podcast own individually. Not a fair comp because we manage about 1,700 people's money, but we're not anti. What I'm anti is misinformation. What I'm anti is people trading on things that they believe to be true that aren't. And the reason why is it gets you in trouble. Now, let me reiterate, just because I am saying these things doesn't mean I've sold my Bitcoin. We haven't. Doesn't mean I'm going to. I don't have any immediate plans. I don't have any immediate plans to do that. But it's just important. You can love an investment without being intellectually married to it, guys. And as a matter of fact, I think every investment in your portfolio should be looked at with a jaundiced eye. It doesn't care about you. It doesn't believe in your infallibility. Your stack of Bitcoin isn't sitting there rooting for you to be rich. And I'll be honest with you, one of the things that is the most concerning to me about Bitcoin is the price level in this environment where I see all of these generationally cheap assets, especially outside of US markets around. Why? Because Bitcoin is speculative to me. I don't know what it is. And you don't either. You don't. You got beliefs. But none of those beliefs are more than 15 years old. It hasn't existed that long. Like I said, it hasn't been through a proper recession. It hasn't even been through a proper rate cutting cycle. Think about that. Now, I have no reason to believe that a rate cutting cycle isn't going to be extremely bullish for it. But again, we don't know. Right? Herein lies my whole point. Do I know about the US dollar? Man, with a lot higher certainty than I do Bitcoin. Meaning, I bet you dollars to cents that the dollar is still going to be around 10 years from now. I can't say that for Bitcoin. Do I think it will? Yeah. Do I know that? No. Do I think gold will? Yeah, I feel very confident that. So do you guys get what I'm saying? I'm not saying it's not. What I'm saying is you can't say it is. You can't. Yeah, you can't. That's literally like looking at a kid that's a freshman in high school and saying he's going to be the best center that's ever played in the NBA. And you go, how do you know that? Well, he's already 6'6". That doesn't mean he's going to get to 7 foot. That doesn't mean that skill is going to keep going up, right? There's many a slip betwixt the cup and the lip, right? There's a lot that can happen between here and there. So the one thing, and guys, the reason I reiterate this right now is because I see it all over the place. I see it with crypto bros. I see it with tech bros. I see it all over the place where there's just these high levels of certainty. And guys, certainty is the hallmark of the charlatan. And if you're running around about investments you're certain about, you're not doing this right. But especially when it comes to something like Bitcoin, there's no internal value driving Bitcoin higher. Bitcoin goes higher as people agree to bid for more of it. Now, I am also not comparing it to this, but I have been shocked at the amount of crypto people that I have run into and Bitcoin maximalists that aren't familiar with stories like, I don't know, Tulip Mania. Go read about that. Again, I'm not saying Bitcoin is tulips. What I'm saying is you're not seeing something that is completely devoid of historical comps. You're not seeing something that does not resemble things that we have seen before. And the problem is all of the things that we have seen before that look, smell, feel, act like Bitcoin does, they have all been bubbles. Now, am I saying Bitcoin's a bubble? No, because it's already violated several of those charts of looking back on how those things behaved, price over time, things like Bitcoin's already cleared a lot of those hurdles. And so I think it'd be irresponsible just to sit there and go, oh, it's a bubble. Oh, it's nothing. And again, for those of you who are like, oh, Zach doesn't know, we own it. We own millions of dollars of it. Millions. But we own it in conservative size. Why? Because of all these things I'm telling you. And like I said to my client, I was like, he was telling me some other, expert, and they're a very smart person that's a Bitcoin, very smart, telling me what they thought. And I just said to him, I go, they have a luxury that I don't. They're a researcher, right? They don't manage other people's money. They're not a fiduciary. A researcher has the ability and the luxury to be certain. A fiduciary doesn't. If the researcher gets it wrong, they just put out a new research paper. If I get it wrong, people lose money. So I'll continue to say, I don't think it's wrong to own Bitcoin. I don't think it's wrong to own crypto. I still think that you're being irresponsible if you own it in a way that you don't own other speculative investments, which is I'll own it, but I'm going to trade around a core position and I'm going to stay disciplined on it, meaning when it breaks my levels, I'm out or I'm reducing my size. Because if you're just trading it, like I just hear the certainty out there and it's all the wrong people. Oh, it's going to 10 million. They can't stop it. Oh, they've been right all along. Yet everybody's right all along until they're not. And the level of certainty around it is just irrational to me. Again, not saying they're wrong. Do you guys get? I hope that's coming across. It's not just, nobody knows where it's going, including me, especially me. But what we do know is when people are saying all the wrong things that would typically be correlated with having the right mindset or the right approach to an investment. And I haven't heard more of that than crypto. Tesla's close. Some of the more ridiculous CoreWeave stocks out there and Circle and some of they're close. But not quite. But again, the same kind of ethos is around it, which is so many people I hear talk about it. It's all confidence. There's none of that. Like I'm long a lot of things in my portfolio that I'm not 100% sure of. I'm not 100% sure of anything in the portfolio. If I was, it would be 100% of the portfolio. And I just think sobriety needs to take a step back. I think we all need to sit there and go, look, we're on the edge of a lot of different things technologically here. And for us to make these overwhelming statements like it is digital gold, it will be better, it will surpass gold. Can I see that happening? Absolutely. Do we know? No. And if that's just a base case, you're not doing this right. There's just too many unknowns. And even if it ends up being that way, I said this to another guy. Another buddy of mine. But I said, what else is in your portfolio? He started listing all these things off. And I stopped him and I go, this doesn't make any sense. And he goes, what doesn't make sense? And I go, if you're so confident about the end result in Bitcoin, why do you own anything else? He's like, well, that wouldn't be smart. And I go, so you're not totally confident? No, I am. And I'm like, looking at him going, okay, you don't see the schism here? Now, I agree with you. You shouldn't be totally confident. But if you are, why isn't it represented in your sizing? Well, I'm more aggressive, Zach. I'm not cared. Well, hey, so was Stan Druckenmiller and George Soros. But when they shorted the English pound, they were 200% short. So, I mean, if you're so sure, if somebody looked at me and said, look, I can tell you without doubt that asset X is going to 10X over the next 5 years. And if they knew that for sure, and they could, they could instill that confidence in me, I'd put 100% of everything into it. So if you're so sure, why are you not just 100% long? Now, like I said, I'm glad you're not 100% long, but maybe you need to start rethinking that. And then the other thing is these people point to these quote unquote experts. And like I said, some of them are brilliant, smarter than I am. And I'll yield to that. I'll admit it to their face. But they don't have a crystal ball. They don't know. Do I understand their arguments? Yes. Do I understand why Bitcoin could be so much more attractive than all the fiat currency? Yes. But I just don't understand how you get to that Bitcoin supremacy stage without it seriously disrupting or seriously threatening the viability of those fiat currencies. And those fiat currencies have really big governments and central banks and armies that can make a lot bigger changes than anybody thinks or anybody estimates. So anyway, I just had to reiterate that again. And I'm cheering for Bitcoin. I think the world is a better place if Bitcoin is worth more. I do. I'm not against it in any way, shape, or form. As a matter of fact, I'm the first guy I heard of that was excited about cryptocurrency because I remember when Bitcoin first came out. And I was all anti-dollar at that point. But you got to be sober-minded and be honest with yourself. And, well, you may not know where it's going. Listen, man, don't give me that whole, every great wealth collapse in history was preceded by that same attitude, right? I can't lose. I know. It's certain. You just don't get it. You're not smart enough. Yeah, okay, great. You know what I am smart enough to do? I'm smart enough not to say that, okay? Because again, have people been right when they've said that before? Yes, but that is also 100% the sidecar that accompanied every great financial or investing disaster in history, right? That certainty where none can be applied. And like I said, we've always said it, certainty is the hallmark of the charlatan. So anyway, and I forgot to do my pause for my disclaimer in the middle, so my social media manager is going to be mad at me again. Anyway, we'll have to get to it tomorrow. But have a great evening. We'll be back tomorrow as always, and we'll keep an eye on it. Bitcoin now keeps creeping up. We're up 2.26% on the day, up to 113.5. So we're moving in that direction. And like I said, I'm cheering for it. I'm on your side. But that does not make me certain. That does not make me know. That does not mean that I know a researcher that has it all figured out and has it all put to bed. That kind of certainty is what gets you run over. And what's my number one job as a fiduciary? Avoid that, right? Because the one thing, and I tell my clients that the one thing I can promise you is if we take big losses, you will have not as good a retirement. How do we afford taking big losses? By making sure we don't get over concentrated in individual assets, especially those that we don't know. So anyway, have a wonderful evening. We got to run. We'll see you tomorrow. You're listening to Know Your Risk Podcast. Find us on social media, YouTube, Instagram, not Netflix, Twitter, X now is what it's called. We're not tough to find. And all you have to do is just either Google or go search on Know Your Risk Podcast on YouTube. Not tough to find. We'll be back tomorrow with both Chase and I. We'll see you then. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.